Here we have the ledgers for Lopez Delivery, and I've set them up such that the assets and expenses are on the left-hand side and the liabilities and shareholders' equity and revenue are on the right-hand side. Now, these are T accounts, cash, account number 100, debit balance 80,000, accounts receivable, account number 103, debit balance 30,000, accounts payable, account number 200, credit balance 24,000, and so on. We have salaries payable with nothing in it, and we have the service revenue account 400, and we have the expense accounts nothing in it because we are just beginning the transactions of June 1st. And what we're going to do now is post these transactions to the T accounts. Now I've numbered each of the transactions: June 1st, transaction 1, June 3rd, transaction 2, June 4th, transaction 3, and so on. That's just for simplicity. I could put the date in, but I'd rather put the number because we're a little tight on space. So on June 1st, the first posting, a debit to accounts receivable, 60,000, and I put it in the accounts receivable on the debit side, and I tick it off. That has been done. Second one is a credit to service revenue, and I go to the service revenue account, service revenue 400, and I credit it by 60,000, and that completes the posting for transaction 1. Then on transaction 2, a debit to dividends and a credit to cash. So I post the debit to the dividend account and I post the credit to cash, 10,000. The third transaction is June 4th, a debit to truck and a credit to accounts payable. So the trucks go up by 20,000, and that's with a debit, and my liabilities, accounts payable, increase by 20,000, and that's a credit to accounts payable. And so therefore I have finished, and I mark off that I posted this one and this one. The next one, the journal entry, debiting cash and crediting accounts receivable. So a debit to cash, 22,000, and a credit to accounts receivable, 22,000. Oops. Okay. Now I have a debit to accounts payable and a credit to cash. Accounts payable debit 16,000 and cash credit 16,000. On the 11th, debit supplies on hand 4,000 and credit accounts payable 4,000. Debit supplies on hand 4,000, credit accounts payable 4,000. On the 17th, a debit to cash and a credit to service revenue. June 20th, a debit to utilities expense 1,200 and a credit to cash. On June 23rd, a debit to miscellaneous expense and a credit to cash. And lastly, I pay the employees. So it's a debit to salaries expense, 28,000, and a credit to cash. And that completes my posting to the general ledger. Now I will summarize and create a trial balance. So now we'd summarize the balances of the different ledger accounts. So we add up the debit side of cash and you get 134,000. We add up the credit side of cash, 55,800. And therefore, subtracting the credits from the debits, we'd say that cash has a debit balance of 78,200. Accounts receivable has 90,000 in debits, 22,000 in credits. So we say it has a debit balance of 68,000. Prepaid rent, nothing happened. Prepaid insurance. Supplies on hand went up 4,000. So therefore it would be $15,000. Trucks, $100,000. Utilities expense, $1,200. On the other side, we have revenue, $92,000. We have accounts payable with a credit balance of $32,000. So now we'll put all this into a trial balance and test to see if I journalized properly and I posted to my ledgers properly. Now we have the trial balance for Lopez Delivery for the month ended June 30th. And here we have a list of the ledger accounts and their debit and credit balances. So cash, debit balance 78.2, buildings, debit balance 320,000, accumulated depreciation, credit balance 36,000, capital stock, credit balance 300, revenue, of course, credit balance 92, and expenses, all with debit balances. We totaled the debits and it's $640,800. And we total the credits and we get the same amount. So we can be reasonably assured that we posted the journal entries properly and we summarized properly. And this is a test that the accountant does of the records prior to making the adjustments. So the next step now is to recognize that some of these expenses or assets have to be adjusted and some of the expenses increase. We must recognize accrued revenue and accrued expenses. So that's the next step.